Good evening. This is the Elliott wave update for the NASDAQ 100 for Monday, February the 14th, 2022. To quickly just recap where I left off last night, I'm continuing to count what is likely going to be an intermediate C wave down. Within that intermediate C wave, we are dropping into the minor third wave. And within that minor third wave, I've been counting down this a 5-wave sequence and to be the internal wave 3. Now I want to just continue to add, it's not really very clear just yet as to what degree this particular 5-wave sequence will be. I still am looking for a much larger move down before even the C wave would be complete. So this might end up being, instead of being minute, these would be sub-minute 5 waves, and then finishing the minute first wave. Then we do a minute wave 2 correction, and then we drop again in a minute 3 to work on this intermediate third wave, which began here. Excuse me, the minor third wave that began here. Excuse me, even I get myself confused. So let me just restart that. We're in a minor third wave down. These, as I've marked them, would be minute degree. That may change, and we might consider this first 5 down within this minor third to be minute wave 1. So these would be sub-minute degree moves. We get a minute wave 1, we do a minute wave 2 bounce, and then a minute wave 3, 4, and 5. And the reason being is that I still feel very strongly that this whole C wave process on the intermediate degree would take a lot more time and go much further than where I feel we could be ending up if this is going to be unfolding as quickly as it's being counted. So what I mean by that is it's like this minor third wave, in my opinion, should be getting us back below 14,000 pretty quick without hesitation. And that's just not occurring yet. We continue to, we did come down yesterday during Globex overnight, and we put that additional low in, which is where I was expecting the market to do prior to putting in a 4th wave. Now, this 4th wave may be complete here. I'll take it down one more notch and then open it up, and we'll take a peek there. I did look at this prior, and I can basically say A, B, C, or it's just going to be wave A, and then this is going to be wave B, and now we're in the C wave back up. That remains a possibility, which I am not, which is why I'm not labeling it as a complete 4. Now, if it should come back up on the 30-minute chart, it's got to get back above that 50. Right now, that is still providing resistance right now. But then we have to just get a high above 14,394, and we have additional Fibonacci resistance at 14,421. And that would mark where this 4th wave would be 0.382 of the 3rd wave. And that's very common. So we would be looking for that there to contain it, and then again for the market to turn lower once again. Now, the rallies were actually pretty strong today, but so were the declines. When they came in and they decided to move the market, it moved in both directions. So all in all, it was a profitable day. It wasn't as volatile as we've seen in the days of last week, but volatile enough where good trades could have been put on. And it wasn't actually always as clear as to when that move would come, even though you could catch it via the near term, the near shorter terms, like the 1 minute, the 2 minute, and the 5 minute charts on the breaks of the moving averages. It was possible to jump in and catch some of these waves. Now, what can we look for? One thing that I can add and this would just be an estimate, okay, for the fifth wave down. I can run Fibonacci extensions, and we do that by marking it from where wave 3 began, which is actually the top of wave 2, right there, and taking it down to the bottom of wave 3, right there, and then back up to the top of wave 4 as it stands right now. So that could change. We're going to put it right there for right now, just to give an estimate. So that being the case, if this indeed we're looking for that fifth wave down now, we would be looking for the first retracement would be 13,766. And that would be where this fifth wave would be 6.618 times the length of the third wave. It's not uncommon, and it well could complete this 5 waves down. And then again, another decision would have to be made on my part as to what degree that 5 waves down is. But then more common would be 100%, which is 13,381, and then 1.618, excuse me, which is down here at 12,759. Now, I am looking for stronger, more intense downside to be hitting the markets as we continue this corrective process. Continuing to hang over the market, of course, is the situation between Russia and the West and within the Ukraine. Also, we had the Fed did move into an emergency meeting this afternoon. I have not seen any news reports as to what the results of that meeting may have been. And so that's still out there. Of course, part of what they could have done is raise rates now and then again in March. So a lot is hanging over the market. The bounce was solid today. It was very tradable, but it was on the back of Amazon primarily. And then that pulled some of the other stocks in. We saw Google join the party. We saw Tesla join the party, and Netflix and NVIDIA. So as the market moves lower, for some reason, many traders decide that they're going to go start buying chip stocks. And so they move into AMAT, Micron, NVIDIA. And also, when the market turns and starts heading in the other direction, they come back for what is known as the FANG stocks, which is Facebook, Amazon, Netflix, Google, and now Uber's in there as well. So it's actually 5. So they start to participate. In fact, that as a grouping was very popular again today. Now, Amazon has still got a stock split coming up, and so that's going to bring a lot of traffic its way in terms of people wanting the stock because they want to participate in that split and get a larger number of shares at a lower price, and then allow that to grow. And that's usually the thought process. So we'll see on that. Okay, back to the market. What can we expect for tomorrow? I think I need to leave open the possibility that this fourth wave has yet to finish, in which case we would be looking for between 14,401 up to 14,021, 25 in that area. And then for it again to turn lower as this fourth wave then is officially completed. And should it come back above this level where I've currently marked it at 76, then this Fibonacci extension would be adjusted to be more accurate on the way down. But I am still expecting a fifth wave down. And then again, I likely will have to readjust the degree depending on how deep that fifth wave would come. And because I still believe we have quite a bit of downside to cover before the intermediate C wave is done and before the minor third wave is done. We're still hanging out. I mean, these have been tremendous moves and they've been deep, but I believe we need to go deeper before this wave, the minor third wave, is complete. So tomorrow, I am expecting possibly for this small fourth wave bounce to complete, the fifth wave down to begin. And I've already gone over our support levels, and you have them all there. They will be adjusted depending on where this ends. And that's where I'm going to leave it. Continue to trade smart. Use the moving averages. Use the Fibonacci extensions and retracements. Use the Elliott. Use the tools that are available to you, and have a great trading day. Our next update will be on Tuesday, the 15th of February.